So I think we're going to start with some of the questions that we got from
Yeah.
readers. And the first question that we're going to address here is from Valentine, who asks, "Are you worried about LLMs affecting your business and pricing power?"
Yeah, so that's a question that I think a lot of people are thinking about. How AI will have uh, an impact on their work, on how they perform their job, and whether their job, security itself will be in danger. So David and I have also kind of thought about it, and I was listening to this podcast by Seth Godin. And he had a few interesting ideas with AI. So I think the first thing that he mentioned, he had a kind of funny way of explaining AI is like AI is like a talking dog thing, which is like two parts. Which part one is you meet a talking dog, and its grammar is not that good, but also don't forget that it's a talking dog, so it's still a miracle. But just because a talking dog is saying something doesn't mean it's important. So I thought that was a pretty neat way of explaining the miraculous nature of today some of these AI tools, but also the fact that we are still probably kind of in the early stage of it. Uh, but the point that I was actually trying to connect from that podcast was he was saying, what is something that people are not thinking about AI enough? His point was, people should think more about how can they work harder. So with this, AI tools, a lot of people are talking about how AI is making jobs easier. Now you can just, press some button and like, you can just say it like, hey, write a deep dive on, I don't know, ASML, and the deep dive ASML will appear on your screen, and you just have to read it, right? You don't have to do any of the work. So that obviously makes your job so much simpler, so much easier. So his kind of contention is, how can I work harder? And this is something I also thought about, right? So when I was initially thinking about MBI deep dives, one of the benefits or one of the advantages that I always thought I had was I had this complete knowledge that, okay, for the next 1 month, I'm supposed to just study and closely understand this one company, right? And I was very focused on it. So I wasn't really studying like five different companies and writing just on one of them, right? I was mostly focusing on one particular company. So it gave me a lot of clarity and a lot of focus on what to study and how to spend my time. I'm not wasting time like looking at 10 different things. Uh, but over time, so since deep research came to the kind of scene, I started realizing that, it's funny because a lot of people actually mention this on like when they're kind of posting on Twitter, like, oh, I wrote this, I don't know, 14,000 deep dive, right, on some company, or like 56-page deep dive on a company, right? Uh, Before deep research, that used to mean something like, oh my God, this guy actually worked hard. And like, I was never a big fan of this, like, number of word or like number of page being sort of like a talking point. But I can understand where people used to come from. Like, okay, that's kind of impressive. That person actually did a lot of work and put his or her thoughts into words, and it turned out to be kind of almost a novel, right? And so, okay, like you may not want to read it, but I can understand why some people may find it impressive. Now, deep research has completely rewired some of these perceptions. Now, I think increasingly, if people are not already, are not going to be impressed by the length of your deep dive, because people kind of got, I think, used to the idea that, okay, the length doesn't matter because AI can just do it like in a minute or like 5 minutes. So I was just thinking, okay, so from business model perspective, I wasn't really initially seeing any noticeable change in pattern after, let's say, deep research came to the scene. But obviously, I was thinking, okay, what's going to happen in 3 years, 5 years, right? This is my livelihood, right? So I can't be really be too cozy or like hands off about it. I have to think through, like, okay, what is economically valuable? Or how can I make things more useful to my readers in a way that I'm already kind of doing. And just add more perspective and value, proposition to it. And I came to this like, idea, okay, what if I write it every day, right? And once I started doing it, it's funny because I was already kind of doing it on my WhatsApp group, right? And I actually initially thought I would be just doing that. Like I would be just reading bunch of stuff and kind of, find like, a key excerpt or two from this, different pieces and, publish it on my website instead of in a WhatsApp group, right? And once I started actually made that transition from WhatsApp to my website, I realized there's also a thing like it's very hard to kind of copy one thing that's kind of suited for a particular medium and just try to do that exact thing on a completely different medium, right? So
Mhm.
I spend a lot of time on Twitter. I have some presence on Twitter, but if I try to do what exactly I do on Twitter to, let's say, YouTube, I don't think it would fly. I don't think it would work. So once I started doing it, I realized that it's kind of a different medium. I can't really just do what I was doing on WhatsApp. And over time, although I've been doing it for like last 3 months now, and I feel like uh, I I'm not worried at all about LLM affecting, my
Well,
pricing power.
let me ask you this. So, yeah, so you sent out a notification email calling out, I think, like the early success of deep dive so far. And I think one of the things you pointed to was that, higher frequency, shorter posts, that was sort of a business necessity to insulate yourself from
Yeah.
AI. And I happen to agree with this point of view, but I'd be curious to hear your reasons why. Like, why do you think daily dose insulates you from AI in a way that the deep dives do not?
So, I would not want to make a big claim that it would completely insulate. Like I said, we are still in the early stage. This is only 2025. I don't
Mhm.
wanna make a big claim about 2030 or 2035, right? But based on what we know about AI's capabilities, and what AI like do for people as of today, this AI I don't think is quite like a threat to my business model. And the difference
Mhm.
that I see, one of the challenges of deep dives is basically you only get like one shot per month, like at least in my kind of business model, right? So let's say last month I published ASML. The month before I published Union Pacific, right?
Mhm.
And let's think from a reader's perspective who is not interested in Union Pacific, like is not interested in railroads, right? Is kind of old business.
Right.
He or she is not interested in it, right? And for some reason, let that person is also not interested in semiconductors. Like that's too complicated for that person. He or she doesn't want to read a semiconductor deep dive or any like ASML deep dive. Now, if you don't read those two deep dives, right? So in some sense, it feel like okay, like you are not actually using utilizing this service at all. It's been like 2 3 months and you haven't really read anything from this particular blog or website or service, right? On the other hand, when you are writing almost on a daily basis, if you choose to subscribe, I think it's extremely likely that over the course of a month, you will find some overlap in interest that it kind of caters to what you are curious about, what you are interested in. And I think it's not necessarily a question of cost, at least for the price point and the kind of audience that I serve today. The vast majority, they're probably mostly think, do I actually read it? Do I actually use it? Right? I think I mentioned to you before, like I haven't seen any difference in open rates or click rates between uh, daily doses and deep dives, right? So clearly people are reading it, and I can see the numbers. The churns are going lower and lower, and new subscribers has a noticeable shift to the upward, right?
Yeah.
So it kind of shows me that there is definitely a product market fit. So that's my kind of initial, like it's still like in 3 months. So who knows how I will feel, or how or what sort of the message market will give me like 2 3 years from now. But that's my kind of initial impression.
Yeah, so I have a few thoughts on this. in terms of just commercial success, I really do think that there are 3 core ingredients that you need for a newsletter. It needs to be high frequency because you need to establish habit. Um, it also helps that if what you're covering is newsworthy at the moment, like if it's topical, and 3, that there's thematic consistency from, like, one post to the next. And I think one of the reasons why Daily Dose has been resonating is because it kinda covers all 3 of those, 3 of those pillars, right? I mean,
Yeah.
look, if you're going to be writing every day, you are by necessity going to be covering tech a lot
Yeah.
more because that's where the news flow is. That's the articles that you read, the Substacks that you read. They're going to be concentrated on the tech industry for the most part. And so that by definition will get you the thematic consistency point because you're writing about tech a lot more than you used to. It's
Mhm.
obviously higher frequency and it's topical. So it's about things that people are interested in that day. The other thing I'll say is that all the points that you raised, I think would be true with or without AI, right? So we can even
Oh, yeah,
set
yeah, yeah.
AI aside. And
Yeah.
I
No,
think
okay,
from
can I kind of, I think I probably
yeah,
did not connect it, well enough, for you to understand how I think AI kind of allowed me, uh, to go for it. For some reason, it kind of gave me the permission that you can do it, right?
yeah,
Like, as I was saying before, I used to have this kind of mental block. When I know exactly what I would be writing about next month, it's just gives me a lot of mental clarity, right? As in,
mhm,
I don't have to think what I should be writing about like a week from now or 2 weeks from now or next day, right? And the reason I think this is I'm actually working a lot harder because I do have to figure out every day what I'm writing about today, right?
yeah,
And like, yes, the deep dive is still there, so I know exactly what I'm working on a more deep dive format. But for every day I wake up, or like, actually before I go to bed, I have to have an idea that this is the topic I'm going to write tomorrow. I actually do the writing the next, like when I after I wake up, but I do need to have some idea. So that's it's AI is not necessarily really helping me in a big ways, but apart from the fact that it definitely has made me more efficient. Like for example, I was writing something on Constellation software. I was doing a bunch of like questions, like okay, how much does Constellation own on topic S, or like these are the questions that obviously you can like just go through the filings. It just takes longer. Right. And
right, right,
I'm on a tight deadline. I have to publish something. I usually have like 3 to 4 hours for to publish my daily doses. So that's where I think AI
yeah.
really is helping me.
But here's where I would say this is just a theory of mine, but I think that the daily dose does insulate you from AI risk in this way, and it has nothing to do with capabilities because I think
Right.
an AI that is capable of crafting a great deep dive is surely also capable of
Right. Right.
pulling out the important parts of an earnings transcripts or a podcast interview and describing like why it's important. And in fact, it wouldn't even surprise me if within the next few years, someone launches, like, some AI version of Daily Dose or whatever,
For
where,
sure.
like,
For sure.
people can pick the industries or the tickers they're interested in. Every morning, you'll get an email with, like, the news or remarks from earnings calls or sell-side conferences that are relevant to those tickers, along with some commentary. And I'm actually surprised no one has done this yet, but, I
It's
think, like, the
coming.
reason it's coming, yeah. But I think, like, the reason, um, these short, high-frequency posts insulate you from AI, is that in encouraging habitual readership, they establish like a personal connection
Uh,
to the audience to the point where like the audience doesn't just care about the information content you put out there, but how that content is relevant to you. So
uh,
so I mean, I like for example, like you wrote recently about Constellation software, but not just about that, but like the trades you made around that. Like, so
right.
you made some comments where you sold it here and you used the proceeds to buy Meta and Google. Now, does that information help the audience better understand what's going on at Constellation Software specifically? No, but it doesn't matter because people are still interested in reading that because they are interested in you, right?
Mm, mm,
And
mm.
that's something AI can't replicate. Like the fact of the matter is like we're just interested in what other human beings are doing.
Yeah.
Like,
No, actually,
it's actually
that's a very good point. Like, and I think one thing that really helps me think through about some of these things is like I'm not just like a producer of. I'm not just a content producer. I'm also a content consumer, right? I consume a lot of content, right? So, for example, like, for me, if you ask me, like, okay, what's a good substitute for Sharp Tech, like Ben Thompson's
Mhm.
podcast? I can't find anything. That's a proper substitute of Sharp Tech. Now, they are not discussing anything that AI cannot answer, right? Like, whatever the questions that they are kind of discussing from the readers or the questions that they are coming up with, like I can ask those questions to AI, and AI will probably come up with a lot of this, similar answers or like in a similar ballpark in terms of insights. But do I want to do that? No. I actually want to listen to that podcast. So if you think
Mhm.
through that perspective, I think it also makes sense why something like what I've been doing on daily doses may resonate more than, let's say, just chatting with AI and stuff like that. And I do think, and this is why I was always more bullish about individual analyst and not like a seeking alpha thing. I mean, seeking alpha is probably a very successful business, and like I'm pretty sure it's a good business, but I never want to uh like spend more time on seeking alpha, let's say, than like on MBA deep dives, because I think ultimately, if you want to build like a durable research business online, like, and it has to mean something that you wrote it or you are producing it. Right, like it's not like, oh, I want to. If it's about like, oh, uh, uh, I want to read a deep dive on construction software, and you just Google it, or like maybe ask ChatGPT, give me a deep dive on construction software that other people have written about. If that's how you are coming to my stuff, and you just want to read one deep dive, you're not going to stick around, right? You're going to just, because you're just looking for just a deep dive for a company that you're interested in, and you have no, like, connection whatsoever from the person who has created it, right? Uh,
Right.
so
Exactly.
that's right.
I mean, look, I got it, a message from a subscriber saying exactly that point, which was like, "Look, I was interested in a line, so I've subscribed to a month. It was great, I enjoyed it, but but, um, but I'm not interested in anything else
Right.
that you have in the library."
Exactly.
So I
Exactly.
canceled. And the next time you write something I am interested in, I'll just subscribe again and cancel again, right? And so,
Yeah.
yeah, it becomes that is the issue with low frequency, like, deep
Yeah.
dives, is that
Yeah.
people they start to consume your work on an ad hoc
Ad
basis,
hoc.
right? They
Yeah.
don't they don't see it as, like, recurring value. They just think, "Okay, it's more like buying a book or something like that." My thoughts on this whole, question, and I'll make this quick because I know we're going a little long on this, but, I wrote a tweet some months ago where I speculated that, some years down the line, the way most people are gonna consume investment
Yeah.
write-ups is by sitting there and passively reading, but by interacting with the report through, like, an AI, chat interface. And I think what this will look like is, let's say you have subscriptions to 20 different paid newsletters. Well, you give OpenAI access to your passwords to all those newsletters. And then when you have a question about a particular company, rather than reading a report someone's written up, you'll just give the robot your questions. And then the robot will return answers that are grounded in the newsletters that you
Mm.
you pay for, and then some public sources. And they'll give you that answer in whatever writing style you prefer. It will be totally customized to you. And so what that does is it sort of abstracts away the identity of any given newsletter, right? Like my newsletter is kind of mashed in there with all the others. And
Right.
um, and you see like some early versions of this happening now. So like I am certain that people upload my write-ups into ChatGPT and
For
ask for
sure. Yeah.
that's already happening.
Yeah.
And now like look, I don't I don't like particularly love that as because I spent like the
Yes.
tone and sure I'm making sure I'm
Yes.
not overstating things and all this kind of stuff. And, like one way I've tried to distinguish myself from the other newsletters out there is through kind of a distinctive style of writing and that
For
and that
sure.
all
Yeah.
kind of gets flend with the AIs. But there's also like absolutely no point fighting this or being upset over it. You may as well be angry at the weather, right? Because
Yes.
people will consume my work however they want, and that's totally their prerogative. Also, I think there may be, like, a big potential positive to this, which is that, like, so many of my write-ups go unread, like, because it just takes time and
Yes.
attention span and effort to read through a 7,000 word write-up, and unless you're, like, an obsessive like me who just likes to read about businesses for the sake
Mhm.
of it, you're just not going to put in that work. You're just not gonna do it unless you own the stock, right? But now what you might do is just upload that report into ChatGPT and get, like, a 200 word summary, and that's better than not reading it at
Not
all.
reading it. Yeah. So
maybe
no,
that, like
I can give you my kind of own behavior. So there are some write ups that you did that I was not particularly interested in, right? And I just made a notebook LM podcast out of it, right? It's a 20-minute podcast, right? And that's just a lot easier to go through. So yes, like ever since I would say I started using a notebook LM. I don't think I have missed any of your posts. So like I'm reading like
yeah,
100% of it, right? But earlier uh I would probably miss like let's say a couple of them, right?
yeah, yeah,
Yeah, you're absolutely right. There's definitely something about that particular point that the like like I said, it's a real problem. If people feel like they're not actually reading it or they're not actually utilizing it, then it's just a matter of time when they will churn, right? They're not going to stick.
yes,
Yeah.
exactly, yeah. Yeah, so I've actually followed your lead on this, and I've watched Scuttle Bits, so I've only published 2 so far, but so far I think it's going well, and then, yeah, we'll see how it goes. Uh,
uh, yeah, I think you were probably going to do 7 to 10 days, something like that. Yeah, I enjoyed the first couple of ones.
oh, good.
I really liked it. Yeah.
Okay, cool. Yeah, yeah, I hope it works out. And so I thought we might address this, second question from Aaron because 'cause it's been sitting there for a while,
Sure.
and I'll just read it here. So, to the extent you're willing to discuss it, curious about and this is directed towards me, but MBI, you can feel free to,
Yeah.
answer as well.
Yeah. Yeah. Yeah.
But so to the extent you're willing to discuss it, curious about your portfolio holdings, names or sectors, how active you are as an investor, how your style evolved, things you got right and wrong as an investor, how you'd rate your performance, stuff you bought, sold recently, and why. To sum up, like to
Hmm.
know more about the dude behind these write-ups. Take this topic any direction. Okay, so like so I manage portfolios on behalf of clients who are friends and family, and then I also manage my retirement account. Okay, and and the underwriting standards are quite different depending on what which we're talking about. So for client accounts, the standards are much more rigorous. So like any name that goes into those accounts, it needs to be, well researched and vetted. I don't use leverage or derivatives, no shorting, no fancy stuff. So like my clients, they pay me to diligently research stocks to have a sound fundamental commercial basis for owning them. Meaning, I can't be buying stuff whose upside is based on like, who I think is going to win the presidential election. You know what I mean? And so
Right.
and I need to respect those boundaries.
Yeah.
And I also have a personal account, by the way, that is managed in exactly the same way as the client accounts. Now, in my retirement account, here I'll roll around in the mud, right? So
Okay.
the standards here are a lot lower. And so like my retirement account, it owns all the stocks that I own for the clients. But in addition to those, I'll also make like random speculative bets. And sometimes those work out and sometimes they don't. So, like I bought Fannie and Freddie preferreds before the election, some common equity in Fannie a bit after the election. Those have obviously worked out great. But I also own some of that foot fungus stock, and that turned out to be a disaster for me. And, look, I can hear the foot fungus mob saying, "Hey, Moberg, it wasn't a speculation, it was great risk return." Fine. Okay. That may be
Okay.
true for you because you did a lot of research, but that wasn't true for me because I almost did no
Right.
research on the stock. Yeah, and look, that's fine. Speculations are okay so long as you have like a certain, I think, like detached attitude towards them and you size them appropriately and, don't
Mhm.
get carried away with the hype. And so, I have a few like busted biotech cash shells in that account as well. And so I just want to kind of put that out there. And then, as far as like industry exposure goes, kind of all over the place, right? So I'll throw out some names where I have meaningful positions. API Group, which we talked about, Meta, we both own, Shift Four, Brown and Brown, we both own, Visa, Amazon. It's pretty low turnover portfolio. Haven't done too many trades in the past year, though I did add several new positions in recent months. So I bought, Secure Energy, which does,
Yeah,
oil
you
and
wrote
gas
about
waste
it, right?
disposal. Yep,
Yeah.
wrote about that. Global Payments, those are and then actually earlier this week, I bought, Constellation Software, right? So
Oh,
those
I
are
did
those
too.
are kinda
Yeah.
like 3. Yeah, so those are 3 and I size them pretty small to start with. And,
I
yeah,
see.
and I actually think, like, this is an interesting time we're in now from, I think, an investment standpoint, just because I feel like if you look outside the radius of
Okay. Yeah.
AI-related stocks and that kinda
Yeah.
stuff, there's been a lot of blowups, and, like,
Oh,
I'm not
yeah.
even
Tell
and
me
I'm not
about it. Yeah.
yeah, and I'm not even sure people are as attuned to this as they should be because, like, AI is taking up so much attention. So, like, and look, we've talked about this in our group chat, but, like, my feeling is that some interesting places to work fall in maybe one of 2 categories. First, there are companies whose stocks have gotten crushed, due to, like, unwarranted AI concerns, where people think AI is gonna be an existential risk and maybe it's not. And then there are blowups in stocks that aren't like, in the immediate blast radius of AI, and there's just been a lot of sell-offs there, so, I mean, like James Hardie, CRM, HubSpot, Judges,
Mm.
SAIA,
Yep. Yep.
Align, Workday, Trade Desk, Global Payments, UnitedHealth, Lulu. I
Oh
mean,
my
and
god, you
it's
just keep
look,
talking about them. Yeah.
yeah, there's a lot, and
There's a
look, it's
lot.
very possible that those stocks deserve to be crushed because their
Yeah.
businesses are
Yeah.
fundamentally impaired, but I'm willing to bet that 5 years from now, we're gonna look back on some of these, and realize that these were just broken stocks and not broken
Mhm.
businesses, and so I find myself spending time there, and then, as far as this question of like, what did you get right and wrong? Like I don't mean to be evasive here, but I do think that that question is harder to answer than it may appear.
Yes. Yes.
First of all, because like I don't do stock recommendations, that's number one. But second is that like you can be right about a stock for the wrong reasons, obviously, right? So like
For
Ackman was
sure.
right about Herbalife in the sense that the stock has gotten crushed and he was, psychologically short but
Yeah.
but but I wonder, like, was he right for the right reasons, though? Like, did Herbalife get demolished because it was some unsustainable pyramid scheme that duped poor people into, like, this unwinnable game of selling protein shakes? Or was it impacted by other factors? I mean, like, Weight Watchers went bankrupt. So, like, it could be that, both Herbalife and Weight Watchers were impacted by the same themes. I mean, I'm not
Mm.
close enough to know, but I'm but y so but I'm just saying, like, you can't look at the stock price alone to assess whether you were right or wrong. So that's number 1. The second thing is that, like, you can be right, and wrong about the same stock over different periods, right? So
I know.
you
Yeah.
so you take Charles Schwab, right? I
Yeah.
no longer own it, but I first bought it in 2018, and one of the hypothesis, I had there at the time was that, higher rates would be great for Schwab because they'd earn more
Mhm.
interest income on their deposits.
Right.
And of course, for that to be true, the deposits need to stay in place.
Lots of assumptions there.
So yes, they earned higher spreads, but they did so on a much lower deposit base than I expected, right? So I got that wrong. But then in March 2023, there was a lot of concerns that Schwab would go, into receivership, just like SVB did. And I took the other side of that trade. And I think I was right about that. But then also, like, the other reason it's hard to make a clear determination on being right or wrong is that, you know, like, my write-ups, they discuss both the good and the bad. I mean, like, I if 30% of my write-up is negative on a company and 70% is positive, and then the stock works, was I right or wrong? Do you see what I mean? So, like,
Yeah.
judging whether I was right or wrong based on how the stock performs, it's not even, like, the right framework
Yeah.
to apply, and so I think instead it makes a lot more sense to, um, evaluate specific arguments that I make for the stock. So it's entirely appropriate to say, "Hey, look, you just did this write-up on, GFL, and these arguments that you made in the write-up turned out to be right, and these arguments turned out to be wrong." That makes total sense, but it rarely makes sense to say, "Hey, the stock went down, that means you were wrong," or "It went up, and that means you were right." And it's like I think it's funny because I think, like, people see me as, like, a quality compounder guy because that was, like,
Yeah.
because I was, like, one of the first to launch a subscription blog that consistently covered those kinda names, like,
Right.
Moody's and Visa and Sherwin-Williams. But here's what you
Sure.
need to realize is that, like, most of my career leading up to that point, um, was focused entirely on, like, deep value, statistically cheap stocks, value of the
Right.
catalyst, like, that kinda stuff, right? Like, I tend to find that the investment style that people are exposed to early in their careers tends to be the stuff that they stick with for the rest of their lives. But, I happened to make a hard break in the mid-2010s and pivoted pretty dramatically. And, so I was not raised in the, quality compounder tradition and just sort of had to figure it out. And
Mm.
my blog, Scuttleblurb, was my way of doing that. And so
I see.
like I think what people need to understand is like this blog, it's not at all written in the spirit of like I'm the guy with the answers. In fact,
Right.
like I would wager that many of my readers have a lot more experience in this style of investing than I do and are
Mm,
much better at it than I am. And so
yeah,
the attitude I've always taken um is yeah, like look, this blog, it's about figuring things out. It's not about me, it's about the arguments, and that's what sort of takes priorities. And like the contrast is, something like like business breakdowns from Colossus or Andrew's yet another value podcast. Those are both great podcasts, by the way.
sure,
But those
sure.
are very much about stock picks, right? It's about investment managers being interviewed, pitching a company they own
Right.
as a good investment. And in those cases, it is entirely appropriate to track the performance of the stocks being presented. But I'm taking a bit of a different approach. And so, yeah, that's.
Yeah.
Let me just stop
You
there
you
for a
you
moment.
you're not one of those stock price bro guy? You
Uh,
know?
yeah,
Yeah,
so
that's a very
not doing that.
common way to approach this question. Like, "Oh, hey, stock price, bro. Like, I don't care what I
Yes,
used to argue. Stock went up. Who cares?" Right? So, but yeah,
exactly.
I absolutely agree that over a long period of time, stock price, bro, that's not a good argument. That's not a good response. Ultimately, you have to be right for the right reason. Like that's, and also I think it's intellectually more enjoyable, right, to approach it that way. If something just continues to go up for a completely different reason, or for or for opposite reason that you used to think, I at some level I would say, yeah, you're probably, you are wealthier or whatever, but it's not intellectually just not as stimulating as it might have been. Anyways, to kind of quickly answer the question that you kind of raised, I disclose my portfolio every day, so I don't have to talk too much about what I own and what I don't own. And that's pretty much, I would say, whatever I disclose, that's like 99% of the money I manage. Only 1% that's not shown. It's actually like a couple of startups back in Bangladesh, like where I'm originally from. Like those are, like I said, this 1% is completely inconsequential. I think one of them is probably going to be zero psychologically. Mark it to 0, and the other one can be 10x, but like, you can't really put a money on it unless it actually goes to IPO and all that. So anyways, so overall, that those startup investments will probably work out okay, but it's 1% anyways, it doesn't matter. Also, do need to add, so far, that's always a thing in capital market, right?
Right.
Uh, Timelines can be like, you can be early for by a couple of years, you can be late by a couple of years, and the whole thing can kind of, drastically change. The only couple of companies that I can think of the top of my head that I say, let's say I was right for the right reasons, uh, was probably Etsy, but in a different way. Like, and I was initially very bullish about it, and then I changed my mind, and I kind of wrote a piece like why I decided to sell the stock. And one of the big kind of arguments I was making that, oh, I don't see a path how they're going to keep increasing active buyers for Etsy. Right. And if you go
Mhm.
through actually what happened afterwards, their active buyers has been kind of static for like last 3 years or so. Right. So that's something like, and that was like my key argument why I decided to sell. And this other was about Adobe. Again, something that I studied first, didn't buy, then the stock dropped a lot. I started buying it, and I think after, owning it for like about a year or so, I sold it, and I had like 3, 4 reasons. And I think all those 3, 4 reasons turned out to be the right reasons. Again, so
Mhm.
far, who knows what's going to happen. So one of the things I mentioned, like, for example, it may be hard to believe that back in 2024, I think, or 2023, I forgot exactly when I sold, like it was straight, it was supposed to be AI beneficiary, right? And I was like, I don't know, like Meta and Google are investing like gazillions of dollars on this thing, and if they can't even do like their own proprietary, editing tools, like what are they investing? Like this should be like an obvious thing, right? Anyways, the narrative today is like they are AI losers, right?
Right.
Or at least at the very least, it's a mixed bag. But who knows what's gonna happen? So again, like those are kind of a couple of things. Again, I think I don't want to give me too many like scores on Adobe, because Adobe's business hasn't really suffered greatly yet. About the question of like some of the stuff that I'm wrong about, I think we should probably talk about Lululemon at this point.
Yeah, sounds good.
Yeah,
No,
so
yeah, love to
un
hear your thoughts on that.
unfortunately, I lost my shirt on Lululemon. It's my by far,
So
actually.
far. So far.
Unfortunately, I can't say that because I bought options, and that has an expiry
I see.
date. Unfortunately, so I can't say so far. I am probably going to almost certainly, not probably, I'm almost certainly going to lose money because my options are down 80%. So I need some sort of miracle. All of you, anyone who's listening, buy like tens of thousands of Lululemon, you know, uh, t-shirts and shorts for me to have any hope to break even. I'm not hoping, anyways. So yeah, so I have lost my shirt, and I think it could be useful, kind of, to talk about kind of my journey and how my thought process has kind of evolved on this particular company and what I may have learned from this experience. So I actually first wrote a deep dive on Lululemon back in November 2020, I think. So almost 5 years ago. I wrote a deep dive. I did not buy the stock. And I waited for like 6 or 8 months. Then I started buying the stock, and then I actually sold it because I decided to buy some like big tech or something. So far so good. Like, and I actually made money in that kind of
Mhm.
trade. And then I think sometime in 2024, mid 2024, or maybe I forgot the exact timeline. Anyways, I bought the stock. I started buying the stock at 350-ish, I think 350, 370-ish level. And then the stock just kept dropping, and I started to move from stocks to options around, like, I think 300 or 300 level, and I kept averaging down uh, around 200. I think the last time I bought it at 200. Uh, it's the
Okay.
options, not the shares. Anyways, whatever my average cost is, I have to check, but it's like down 80%. Whatever my average cost, it's down 80% from current price for those January 2026 options. So one of the things that I have uh, realized, one of my big learnings is, if you follow a company for like 5 years, the common sense intuition is that over time you will learn about the business more. You will have greater expertise and understanding about the particular business and the industry. That's a common intuition. But my experience with Lululemon actually showed me the other side of it, the darker side of this kind of comfort and kind of this assumed understanding of the business and the industry that you tend to think you have just because you have been following a particular company, let's say 5 years. And the reason I kind of fell for this trap for Lululemon was, uh, if you go back to my deep dive on Lululemon in November 2020, you will see that I was actually modeling $10.8 billion of revenue for Lululemon in FY 2028, right? That was my initial sort of like modeling that I was doing. Today, their LTM revenue is 10.8 billion, right? And throughout this most of the period from 2020 to 2023, 2024 period, I remember looking at Lululemon and my numbers are always off, like significantly off. Like I'm way
Mhm.
behind, right? They just kept reporting great numbers, great numbers, great numbers. And once you follow that thing for like 3, 4 years, you tend to develop a sense of appreciation for the company, right? Oh, this is a great company. Like, I can't be aggressive enough. No matter what I model, the company just goes away from it, right? They just keep reporting better and better numbers, right? So even when I was not owning Lululemon, I had this deep sense of appreciation for the kind of business and the modes they have built around it, right? And I kind of my kind of conclusion was, yes, it's an apparel business. And people tend to think that it's very hard. It's a very difficult business to be in. It's unforecastable where these businesses will end up like in 5, 10 years, right? And my kind of conclusion was kind of the opposite. Like, no, yes, it's an apparel business, but actually, this is a special business. They have the kind of
Mhm.
the source of the moat is atypical. It's not like, they're just, plastering money to the celebrities and like they are promoting it and people are buying those, or shorts or like, leggings because of those celebrities are wearing it. Like, no, no, it's more organic, more local, community driven promotions, right? And they don't spend as much on promotion as, let's say, Nike or Adidas. And I just thought, like, it's a much more sustainable business. They can protect their moat, and they have kind of, gone through this escape velocity since COVID. This brand is going to be a lot more bigger, not only in the US but also globally, right? So when the stock dropped, like, I think I bought when the stock was already down, like, I don't know, 35-40% or something like that, like, from 500 to like, three, like I said, 350. So like 30%, something like drawdown. That's when I started buying it. Uh, and the problem is, and this is something that I think you kind of alluded to, is even 5 year is actually a very short period to understand all the vicissitudes of the business of the cycle. So 5 years at some level, it feels like, it can feel like a long time, but it feel like, you may not even experience one cycle. So in some, sometimes I felt like looking at Lululemon is like maybe someone with fresh eyes who does not have the baggage of following this, their upcycle and like, constantly finding themselves, oh my God, I cannot be bullish enough about this company, right? They just keep reporting much better number than I can model, right? And because you have gone through that experience, it is a baggage in your mind, right? And you have already developed a very positive opinion about this company. And then when they're on the other side of the, like, then you are constantly overestimating the numbers because the company is now, in a kind of different mood. Anyways, there are different issues, obviously. I'm just speaking more in generalities, but if you get down to specifics, one of the things that I got wrong about, I think, like I said, about competitive dynamics, the modes and that I talked about, I think what I missed was for a long time, I looked at Alu and Vori. Obviously, these are like the two most, frequent talking points. Like, oh, Alu and Vori, like, they're special. Lululemon will not be able to compete against this, or will have a harder time competing against these companies. That's what the Bears used to say. And I was like, hey, competition is not new. This is Apple we're talking about. There's always competition, right? I think the one thing that I really underestimated is Alu and Vori are somewhat different in certain aspects. So uh, the earlier competitors before Alo and Vori, I think they had a flawed approach in competing against Lululemon. So they are most of the, like, players have this approach of like, oh, we're going to offer you a legging that is just as good looking as Lululemon's, and it's going to be cheaper. And they thought, oh, what could be, better? You are getting similar thing, right?
Mhm.
Or in a lower price point. And actually, it didn't work, right? They could not compete against Lululemon because when it may look similar, but customers are not dumb, right? They understand, like, people buy Lululemon stuff because of the quality, because of the endurance, because how long it lasts. And when you give people if you buy like Amazon Basics, for example, the leggings, right? It may look the same, right, on the first day. Then it starts spilling, and the quality issues is a huge concern. It just doesn't last compared to, let's say, a Lululemon leggings. And I think that's where most of the competitors actually fell short. They thought they did not want to go after $98 leggings market. They thought they want to go like, $40 leggings market. And they thought Lululemon makes like 60% margin. We don't need to make 60% margin, right? We will take lower margin, but we are going to offer them the same quality product at the same sort of like, sorry, a lot lower price point. Now, ultimately they could not actually maintain that promise, and customers figured it out, and they come back to Lululemon. Now, Alu and Vuri did not make that mistake. They decided to stay at the same price point and similar quality, although that's up for debate. But that's what they mean. I think the perception problem that customers do not look at Alo and Vori and think I'm buying the Lululemon like stuff for lower price. No, right? Obviously, Alo uses a lot of this celebrities, influencer. In some sense, they have an elevated perception compared to, let's say, the quality that they offer. So yeah, so like, Allo and Vori are a different sort of competition compared to what Lululemon faced before. Again, if you think about it, if you followed Lululemon for a while, actually your first instinct may be to underestimate the competition because you have seen these all these competitors that come and go, right? And eventually none of them really has the staying power. Lululemon was the de facto monopoly in the sort of leggings. I'm using monopoly term almost like in a joking way. Obviously legging has no monopoly. But yeah, again, like if you follow a company for a long time, it can create its own baggage. uh, so Apart from that, about the competition stuff, and even the management actually acknowledged after sort of disregarding, now they started acknowledging that the competitive environment is different, even compared to a couple of years ago. I think that's like almost a direct quote from the last earnings call. So yeah, even management probably underestimated the kind of different dynamic, right? But again, like I think what really is difficult for me as like as an investor was like I did experience this with Meta as well. The change of sentiment is just so swift and violent, right? It's just so hard to psychologically update it and kind of get to where market is. So, for example, as I was saying, I was modeling $10.9 billion revenue in 2028, but they are already there, right? So they're obviously making a lot more money. But the problem is the multiple used to be 50 times next 12-month EBIT operating income. Now it's 10 times, right? So I could not it was hard to imagine if you told me in 2020 like, hey, MBI, like this company is going to actually get there 3 years earlier than you were thinking, but unfortunately you'll still be down 50%. I know, why is that? Why would that happen? Oh, that multiple, that's going to be 10x, right?
Right.
Every time I have experienced it, like more than a couple of times about this violent shift, and every time it's a jarring experience to go through.
Yeah.
Because when the sentiment shifts to the opposite, like is Lululemon just set for like they're done for good? No, I think they still have a shot. I mean, since I own options, I'll probably not be there to know whether they can do it. I would already lose money, unfortunately. Probably a lesson anyone who's listening, like you have to be. I did mention when I actually bought the options, like, hey, I know there's a risk that I may lose all my money, and yes, and unfortunately, I am going to lose probably a significant chunk of my money in these options. So yeah, so like Lululemon still has a shot, but I don't think they will regain their sort of like the de facto monopoly status in like a technical apparel that they used to enjoy perception wise, right?
Yeah.
I think Alo and Vori are definitely like it's a now the shift from monopoly to oligopoly or whatever. Like I'm obviously using these terms very lightly, like
Right. Yeah.
right? This is apparel, and it's not like a monopoly or oligopoly. But I'm saying like when you transition from like this to that, it's a very unpleasant experience to go through. Even if Lululemon is a very decent business, turns out to be a very, very decent business over the.
Yeah. So I know nothing about this space whatsoever, but I'll still throw out some comments here,
Sure.
and these could all be wrong, and this isn't specific to Lululemon, but I feel like there are maybe a few people I've met in the course of my career who just seem to thrive and excel in, specialty branded retail and apparel, and it's always, like, struck me that, like, one of the things that they seem to have in common is sort of like a certain, like, felt sense when it comes to, like, consumer preferences and tastes. And I know this sounds very squishy, but, like, eh, this is part of the reason why I've always avoided this space is because, like, my wardrobe, it's full of, like, Amazon basics and
Yeah.
like, things that my wife finds at the Goodwill store. And, like, um, you know and I've always felt like all the issues that matter when it comes to specialty retail and apparel, they don't live inside, like, an Excel spreadsheet. They don't live
Right.
inside SEC filings or earnings transcripts. They live, like, out there in the wild, like, in the closets of teenagers and on the characters of
Mm-hmm.
sitcoms and blockbuster movies, on the feet of, trending rappers and athletes and that kind of stuff. And, like, when a company has, like, a bad couple quarters, it can just generically be tough to separate, like, what's a temporary macro impact and what's, like, a
Yes.
secular impact.
Yes.
And I always felt like that's especially true with, like, specialty retail because it's such a fragmented space where, like, somebody's always comping positive at the same time that others are comping negative, and, like, I mean, like, I if the Gap or Abercrombie, like, comp negative for a few quarters and then management gets on the call and says, "Oh, it's a macro issue," and or they were, like, off brand this season, whatever it is. Like, I don't have a good intuition for, like, what's true, what's not about that claim. Like,
Yeah,
I feel like for me to get to the bottom of something like this, I would need to, like, have some forward-looking view about, like, how systematically on point they are when it comes to, like, fashion and trends, and that stuff can move under your feet so unexpectedly that it's always felt to me like I would need to be taking sort of like a constant pulse of things, and like you know, these stocks they can make for good investments, but they've also just seemed to me like to fall more on this closer to like the high maintenance side of the
mm,
spectrum than like
mhm.
the set it and forget it side, if
Yeah,
that
no,
makes sense.
I think, uh, no, you made a very good point. I actually still think, uh for Lululemon, Aloe and Vori are not the primary reason for their recent softness. It's mostly the
Mhm.
consumer discretionary spending is actually itself is the main culprit here. But that does not mean I don't want to negate the competition factor. Like, even when the
Mhm.
discretionary spending comes back to like, normal, or like, it starts growing at a good clip. I think the Aloe and Vori competition will become a persistent, talking point even 5 years from now. That's what I'm saying.
Mm.
Like, even if it may
Yeah,
not be the only reason for them to be down, but it's going to be a thing, and it's going to exert pressure on Lululemon's, let's say, long-term multiple. Maybe 10
yeah,
times is not the long-term multiple, but even if, like, it's not going to 50 times. Like, I don't think that's going to happen uh, anytime soon, or ever. But I also want to just quickly touch on something that you mentioned. Like, I actually started sensing Lululemon management has become very nervous over the course of, let's say, last 5-6 quarters. And the reason I say that is, I obviously, like, once I owned Lululemon, I started doing this visits to the store on a pretty, like, regular basis. Like, every couple of weeks I would go to a Lululemon store, and anytime I'm visiting any new city, I would go to the Lululemon store just to have a feel, like, just to have a kind of an understand the vibe around it. And, uh, I started noticing, I would say, maybe a few months ago, maybe 3, 4 months ago, when I would go to the store, and I would see the kind of new stuff that they are launching, and more than once I felt it feels cheap.
mhm,
Right? So it's not like, this is supposed to be a premium brand, with a premium sort of like in a perception. And I would go and touch, and, like, I remember touching like a Lululemon logo on a particular new t-shirt, and it just felt cheap, right?
mhm,
And I thought, these are the reasons. Like, so before that, I used to think, okay, why is it so hard that, yeah, fine. For example, Alu and Vori come up with like new styles, and like, launches that, let's say, turn out to be very popular. I'm like, okay, why can't Lululemon just basically copy that, right? With some like tweaks, right? This is fashion we're talking about. I'm like, okay, this is the larger brand, more scale brand with more, greater presence. They should be able to find it. Should not be the end of the. I do think that's still the case, but I also started saying, like, when you are kind of behind for a couple of quarters, you start doing you may end up doing things that are actually long term harmful for your brand. You don't want to make your customer feel you are becoming a cheap brand when you are
right,
charging like $100 or $128 actually for leggings or for t-shirt, right? So those are the things, and these things are like, once it sets in, it can go haywire, right? So,
yeah,
yeah, so those are the kind of things I kind of, notice over the course of, like, owning this company over the last, like, couple of years. Uh, but yeah, like, but maybe Buffett already always talked about he doesn't want to invest in retail. He does not like this company. Even Munger talked about why he doesn't like Nike, and maybe I just needed to learn it the hard way. Who knows?
Okay, cool. Maybe, so we have 2 questions on
Yeah,
Align Technology. Maybe I'll just address one of them, uh, and then I'll save the second one for, the next podcast. Let me maybe take the easier or not the easier one, but the one that requires a shorter,
shorter. Okay.
um, response.
First one.
Okay, yeah, here we go. Okay.
Yeah.
So it's just, have you looked at other markets as case studies for potentially how Align could end up? The dental implant market seems to have gone through a similar growing pain, oligopoly with premium product, then competition with value implants. Strawman navigated this mess very astutely, expanded product offering from premium to value, similar to what Align is doing, and came out at the end with even better margins, stronger growth, and market share. Barriers to entry may be lower, but barriers to scale almost insurmountable. Would be curious to hear your thoughts on this. Um, yeah, okay, so like I don't know Strawman all that well, but I think like two differences between clear aligners and other dental orthodontic products that come to mind is that, the former, first of all, is a less mature category in that, it's far less penetrated versus its addressable market. So like 80% of malocclusion cases are still addressed with wires and brackets. And also the second thing is, clear aligners also benefit to some degree from some to some degree from like consumer pull where like consumers will ask for Invisalign by name in a way that they wouldn't ask for a dental implant product by name. Meanwhile, I think any attempts by companies with like broad dental ortho product portfolios to scale clear aligners have been underwhelming so far. There's Henry Schein, Strawman, Dentsply, Sirona. All of those guys have their own clear aligner brands. And they thought that they could leverage existing relationships with dentists and orthodontists to also cross sell clear aligners essentially. And I would say that this project has um, been by and large a failure. Only a few of those guys are breaking even at this point, and there's really only like two successful clear aligner players in the market today in terms of proven ability to generate healthy margins. And those two players are Align and Angel Align. And Angel Align is a Chinese competitor. And it
Oh,
just so happens that both of those companies are 100% dedicated to clear aligners. And what that suggests to me is that like clear aligners are probably uniquely challenging with respect to manufacturing and branding and software and scanners and all that. And they require dedicated organizational focus. And so I think for those reasons, Align probably has its hands full just perfecting clear aligners. And while, there's an opportunity to diversify within that category, yeah, I don't see them kind of moving into other sort of dental orthodontic products. For now, it just feels to me that clear aligners are a hard enough problem on their own. Yeah, I think we could probably um, stop recording there, and then so yeah, so we'll just save the other align question for next time, and then we'll have I think there's a few more other
yeah.
interesting topics we'll have at that point too. So